All right, hey, this is Josh here. Let's talk about a long-term care annuity and how this can help you as far as when you're planning. You know, you have your annuity, you have your long-term care. But to give you a little backdrop on this, the long-term care industry really got pilfered. I remember back in 1999, 2000, 2002 was selling for Northwestern Mutual. And they just underpriced all these carriers. They underpriced. They didn't realize the glut of the experience, and they got hit hard. There's only about 10 to 12, 15 long-term care. I mean, traditional long-term care, straight up carriers out there. But let's take a look at this article right here, and let's dissect this. But how does a long-term care annuity work? And then I'm going to highlight and go to this. Okay, it says traditionally there are only two ways to handle potential costs of long-term care and retirement: paying out of pocket or purchasing long-term care insurance, like what I just mentioned there. But long-term care annuities can give you another alternative for planning for your long-term care retirement. Let me see if I can work this computer. Computers are nice if you know how to work them. But what is an annuity? Before we examine the ins and outs of a long-term care annuity, let's define the base product, the annuity. Again, annuities are sold by insurance companies. The investor pays the insurer a lump sum in exchange. The insurer will provide the investor with regular guaranteed payments. The insurer invests your money and shares some of the investment growth with you via your guaranteed payments. All right, so we got immediate annuity, deferred annuity, but I want to focus on right here. How does a long-term care annuity work? Long-term care are deferred annuities, not income. Are not immediate but deferred, meaning past 12 months with a long-term care rider. This means that these products, like traditional deferred annuities, provide future payments based on an initial lump sum investment. So for example, it says right here, the long-term care rider offers you some additional financial protection if you need long-term care. You can expect to see double or triple your investment in a long-term care annuity for long-term care benefits. In other words, a $100,000 investment in such annuity would translate to $200,000 or $300,000 worth of long-term care benefits. Now, to trigger that, you must qualify 2 out of the 6 activities of daily living known as the ADLs. And that's true of your standalone long-term care insurance as well. But they are bathing, dressing, eating, transferring, toileting, and continence. And this is a different way to do it. And then this article goes down to long-term care annuities versus long-term care insurance. Long-term care annuities offer one possible solution for your future care needs, but this young lady warns that long-term care annuities are not necessarily the right product for young and healthy individuals. She explains that those in good health generally get more bang for the buck with either long-term care insurance or a life insurance policy with a long-term care rider. So again, it depends on your health. But if you have some issues, right here it says if you have certain pre-existing medical conditions, you may find that a long-term care annuity is a good solution because the underwriting is less stringent than it is for long-term care. So that's how it works. For more information, again, I'm always updating things. Head on over to Stanek Insurance, or actually head on over to StanekSeniorBenefits.com, and we'll go from there. All right?